Good morning, everyone. Welcome to our Kazakhstan credit rating discussion online. I hope you hear me well. We are waiting for more participants at the moment. So before we start the webinar, a few technical issues. So I hope you hear me well. So please put the mark if you have a sound, great. Also, you have a Q&A part at the upper right side of your screen. And also you have the chat on the left side, so you can submit your questions to today's webinar in the Q&A part. Let me introduce today's topics and speakers. We are very welcome today to have the following guests on our webinar. Ainur Tumysheva, the representative of Kazakh Invest in Germany. She will disclose the topic of anti-crisis measures and investment opportunities in Kazakhstan. We also welcome Stanislav Chuyev, head of research department of Halyk Finance. He will talk about the Kazakh macro 2020 trends and prospects. And also we welcome Zhanybek Aigazin, Director of Applied Economic Research Center. He will share his macroeconomic forecast for Kazakhstan this year. And before we start with our guest speakers, we would like to open this webinar with our brief presentation of our credit rating of Kazakhstan, which was just updated 12th of June 2020. So as many other speakers and participants you know about our company RAEX-Europe, we are operating here since 2013 in Frankfurt am Main. We are independent rating agency registered by ESMA, having the official status of external credit assessment institution, and we are focusing on the CIS markets. As you may see that we have the ICAI mapping from April 2018, which means that our credit ratings are at least comparable with the ratings from the big three. Also, apart from the classical credit rating, we assign the ESG ratings. We provide additional services for stock exchanges and also business conferences, presentation in the European Union, and industry and social economic research. So, as I mentioned, just 12th of June this year, we made an amendment of Kazakhstan, basically changing the outlook from positive to stable, but at the same time we confirmed the rating at BBB minus. The same actions were done for Russia at the same date. Let me start with the explanation of these rating actions. So we still see some positive factors. First of all, the gross government debt, which ratio to GDP and budget revenues remained stable and at bearable levels in 2019, around 21% and 100% respectively, while the structure of debt remains mixed. On the one hand, external debt accounts for 46% of total debt. On the other, short-term debt remains low and covered 21 times by international reserves, while 42% of the external debt is in the concessional terms. However, due to the fact that around 30% of debt is nominated in foreign currency, we can expect slight increase of the debt load by end 2020 due to Kazakh tenge depreciation. So if you have any problems with the sound, I see, so just restart the page and try to use Google Chrome for proper sound recording. So the second positive factor also related to the government debt is of June 2020, the yield spread between the 10 years German bond and the euro-denominated Kazakh government bond with maturity 2028, despite widening up to 2 percentage points, stood at bearable levels. So basically, here you can see our expectations about the overall government debt and the debt structure as of end 2019. The next positive factor is the adequate quality of the monetary policy. So in the response to the devaluation of national currency in the first quarter 2020, the National Bank of Kazakhstan significantly tightened the monetary policy by increasing the base rate by 2.75 basic points up to 12%. However, then it lowered the rate back to 9.5%, so less than 1 month later. And we anticipate the policy to continue to be tight, pursuing the price stability as well as moving gradually to the fully free float exchange regime. So the fact that Kazakh tenge is already free float. However, the effectiveness and transmission mechanism remained limited, especially taking into account the weak financial system and still high levels of dollarization. The next positive thing about Kazakhstan is the international reserves, which stood around 31.5 billion of US dollars as of May 2020, which exceed the IMF recommended reserve adequacy level for countries with a floating exchange rate, and also international reserve cover around 87% of gross government debt and 6 months of imports of goods and services. Finally, as compared to other countries, GDP per capita in PPT terms is expected to reach an all-time high around 28.5 thousand US dollars in 2019. And remain one of the highest in the CIS peers, as well as unemployment rate, which is low and stable, around 4.8% as of end first quarter 2020. However, we can expect the slight increase of this metric by end of the year. Going to the restricting factors, first of all, we have to mention the banking system continued to shrink in 2019 and in the first half a year 2020. So the sector's assets to GDP stood at 39% in 2019 as compared to 40% as of end 2018, and we expect further decline of assets. As shown by recent figures. So by 1st May 2020, assets declined by already 2.7% from the beginning of the year, while loans outstanding declined by 4.3%. The next restricting factor, which was moved actually from positive, is the inflation, which remains elevated and volatile due to the high exposure to external shocks. So after reaching 5.6% by end 2019, the CPI index hiked up to 6.7 by end of May 2020, mostly due to the tenge depreciation, and expected to be in the range 8.5% by end 2020, which is above the original National Bank of Kazakhstan target of 4.46%. This is also the factor moved from the positive to restriction is the contraction of the economy. So after significant growth of GDP at 4.5% in 2019, the economy of Kazakhstan has already contracted by 0.2% year over year during the first 4 months of 2020. And we expect the overall contraction by around 0.5% by end of the year, taking into account the implementation of significant fiscal stimulus, as well as gradual recovery of oil markets by end of the year. However, continuous turbulence in the global economy, as well as potential prolongation of the quarantine restrictions in some regions, can lead to a deeper contraction up to 2.5% year over year, which you can see here on the graph. Also, we still assess the economic competition and business efficiency in Kazakhstan as restricting, limited by the weakness of the institutions and the significant footprint of the state. On the left side, you can see the corruption perception index and the position of the country in the doing business. Also, according to the Global Competitiveness Index report from 2019, the overall score for Kazakhstan was 63, which is 55th place from 140 countries, and this is slight improvement as compared to 2018. Also, the foreign direct investments, this is net FDI inflow, have declined since 2016, and we anticipate a net inflow of FDI close to 2% of GDP in 2019. And finally, one of the main factors driving our decision to change the outlook from positive to stable is the transition from surplus to consolidated budget deficit. After posting a substantial surplus of 2.6% of GDP in 2018, the fiscal balance turned already to deficit of around 0.6% in 2019, and such dynamic was mainly driven by higher government social expenditures. Already in first quarter 2020, due to the sharp decline of oil prices, strict quarantine measures in most of the regions of Kazakhstan, as well as overall turbulence of the economy, the fiscal deficit widened up to 8.5% of GDP, this not taking into account the transfer from the National Fund of the Republic of Kazakhstan. However, with these flows, it reached around 0.2% of GDP. And overall implementation of the anti-crisis fiscal support, which is already cost around 6 trillion of tenge and lower oil prices, can lead to the deficit up to from 4 to 6% of GDP. At the same time, the fiscal position of the government will be supported by significant accumulated fiscal reserves of the National Fund of Republic of Kazakhstan, which you can see on the left side. And finally, we have three negative factors. First of all, the banking sector position, and which is expected to worsen in the mid-run. So basically, the National Bank of Kazakhstan already implemented the asset quality review. So the level of NPL in the system reached 8.1% by end 2019 and continued its growth in the first quarter 2020. So by end of April 2020, the NPL levels reached 9.4% of total loans, with 9.5% for corporate and only 5.5% for retail loans. However, we expect these levels to rise in the following months, but to stabilize by end of 2020. At the same time, we mentioned that banking system of Kazakhstan is much healthier for these crises as compared to the previous episodes, and the profitability metrics is expected to decline further, which already observed. However, the level of capitalization and liquidity remain favorable, since the capital adequacy ratio was 22.7% this year, so 1st of May 2020, and the liquid assets in national definition form around 47% of bank portfolio. At the same time, the local capital markets remain volatile and non-liquid as compared to the global peers. However, as you will see, the Kazakh index dynamic show the recovery from the March 2020. And also we expect some further developments related to the Astana International Financial Center. At the same time, the last negative factor is the contingent liabilities. So the number of state-owned companies has been gradually declining as the privatization process has continued in 2019. However, due to the COVID crisis, the privatization of large enterprises was already delayed this year. So we think that the contingent liabilities of the government will remain in place, at least in the mid-run. Oh, and finally, we have two stress factors which restrict our rating assessment: is the high dependence and concentration on oil and gas industry. So around 44% of the state budget formed by oil and gas related revenues. And the second stress factor is the dollarization levels of the financial systems, which despite the gradual decrease remain high for as of end April 2020, the deficits in foreign currency form around 43% of total deficit base, and the loans in foreign currency around 17% of the loan portfolio. At the same time, we need to mention that we can upgrade the rating again, so which can be led by the increase of oil prices higher than our base scenario. Also faster and stronger than originally anticipated recovery from the current economic crisis, as well as improvement of the general states of the banking system, especially asset quality. At the same time, we can downgrade the rating of Kazakhstan with a further deterioration of economic activity, unexpected devaluation of local currency as a result of pressure from lingering low oil prices, and further weakening of the banking system, which would materialize contingent liabilities of the government. Mentioning that, I have to notify that we have the next scheduled revision for Kazakhstan, 11th of December 2020. However, due to the significant changes in the global and regional economy, we can do the rating action before this day. Thank you very much for your attention. And if you have any questions, please submit them to the chat or the Q&A part. And I would like to introduce our next speaker, Ainur Tumysheva, representative of Kazakh Invest in Germany. So I switch off my microphone. So Ainur, the microphone is yours.
Good day, colleagues. Thank you very much for this opportunity. I would like to quickly present you the current standing of Kazakhstan in this pandemic situation, as well as the investment attractiveness of our country after the post-crisis situation. Timing. So as you all know, global pandemics affected the entire world economy, and it's important to realize that this crisis has an exogenic nature. In other words, it's caused by the outside factor, specifically the pandemic. Unlike the 2008 crisis that has revealed deep defects of the financial system, currently we're faced with a sharp decline in the consumer demand, and like the entire world. And hopefully this is not going to be for the long run. It's going to be a short-term period standing. Kazakhstan, like the rest of the world, is experiencing similar ideal storm, if I can say that. However, the economy is doing relatively not so bad. So if you look at the slide, if we take such parameters as short-term economic indicator, you can observe that decline is actually not that significant. In the graph, you can see the results of January to May of 2020 comparison with the same indexes of last year, 2019, which has actually been pretty positive year economically for our economy. And we can say that 2020 has inherited the same kind of dynamic pace minus the COVID pandemic. And then clearly lockdown has surely affected it, and hopefully, I say it again, temporarily. So based on the Ministry of National Economy, we have considered 6 basic industries that are shown in the slide, lower half of the left side, that are significant for our economy, such as agriculture, heavy industrial production, construction, trade, transport and storage, as well as the communication. And out of these industries, you can see a certain decline in transport, trade, and construction. As we can definitely tell, this was caused by the imposing of restriction on trading centers, restaurants, transportation. And I would like to say that decrease is comparatively mild to a lot of economies around the geographical location. And of course, I would like to highlight and point out the government measures that were taken during this time to mitigate the crisis or the effects of crisis. First of all, the country was introduced a very early lockdown. This happened on March 16, and I believe this was around the same time that lockdown took place in Germany. This has helped us flatten the epidemic's curve. So far, we have over 17,000 people infected in Kazakhstan and around 127 deaths, unfortunately. This figures, I'd like to say, are significantly lower than the most countries of the similar size to us. And Kazakhstan has unprecedented security measures that have been taken by the government to prevent the spread of the coronavirus in the country. So in the financial terms, if we talk about what has been done by the government to help the situation or stabilize the economy, the government has allocated about 3.5 trillion Kazakh tenge from the National Reserve, which comes to about $8.2 billion US, funding various measures in order to fight the outcomes of the pandemics. For example, over 700,000 SMEs, companies, and individual entrepreneurs have received tax incentives during the lockdown, which has helped them to save about $2.4 billion US in monetary terms. The social assistance included deferral of payments of loans and utilities that were granted to 1.6 million citizens. Moreover, 4.25 million citizens received direct financial assistance from the government. And if we talk about generally monetary amounts of the funds that aimed at supporting citizens and businesses during this pandemic, it has amounted to over 6 trillion tenge, which is 14 billion US that have been allocated to all of those measures. Excuse me. And if we talk about non-financial measures that has been taken by the government to help the situation, then Kazakhstan suspended all of the visa-free regimes for foreigners until November 1st, and this comes into Germans as well that are willing to enter our territory on various types of visa categories, would that be work, business, travel, and so on. All of that, unfortunately, will not be available until November 1st as of now. Regarding the restoring the economic situation in Kazakhstan. And we can all tell from the previous presentation that 2020 is going to be a tough year economically for the country. And what government is doing to help the situation is they have approved the comprehensive plan to restore the economic growth until the end of this year, which would include various measures such as tax incentives, expansion of loan issuance, measures to develop infrastructure, domestic production, entrepreneurship support, and employment preservation. So, of course, it's a tough timing for everyone, but as I would say, every cloud has a silver lining, and the crisis has allowed to rethink and reallocate governmental funding to inject substantial funds to the economy. As a whole, pandemic, together with the decline of oil prices, reinvents the diversification of Kazakh economy and moving away from the oil and gas saturated economy values and go towards the high added value industries and more into a local production. And that's how the investment attraction comes into play in this whole picture. And this is all facilitated by the existing investment climate and infrastructure that we have managed to build during the last decade and some favorable conditions that we offer to investors. So the rest of the presentation is going to be on the investment attractiveness, which I will go very slowly. Hope the slide is moving by itself. So the strategic location, clearly it's in the middle of Europe and Asia. We have transport corridors as the Silkway, and Kazakhstan is putting a lot of effort into hiring the transit potential and the traffic that goes throughout the country by creating a good infrastructure for all of the railways and outerways and the ports as well. Now, to create all of that, we have parallel running governmental state programs that are helping us to inject with governmental money the infrastructure projects. So all the roads to be built by 2020 and 21. So why Kazakhstan? It's clearly rich on resources, and we're trying to diversify our economy. We stand on pretty good positions compared to some of our Central Asian neighbors in terms of the procedures that we go through and the incentives that we provide for investors. And we have created different projects and potential opportunities for companies who are willing to come into Central Asian market in all various different industries. We work along with Big Four such as Deloitte that help us to assess the market, to look into risks realistically, and have run financial models to see what would be more lucrative and what not. So we know what to offer to foreigners and what would be interesting for companies. Of course, the legislation, investors' right protection. The colleagues from RAEX already mentioned the AIFC Financial Center, a common law court system, fintech growing in that sector, as well as we have KDIF, Kazakhstan Direct Investment Fund, that is another governmental state-owned body that was created to co-finance all foreign investment projects on parity level. So all of the foreigners that come in to invest their money have the assurance from the government side to share the risks half and half. So governmental funds reallocate exactly 50% of all the investment, and it has a strategy of eventually exiting out from the project, leaving it only to the investors themselves after a certain share of risks would be covered. Also, from the government level, we have investment ombudsman, which is the prime minister of our country. We have a special Foreign Investors Council that is chaired by the president of our country, specifically for Germany. After the president's visit in December of 2019, there has been a set special program on investment cooperation between Germany and Kazakhstan. So we have created a special governmental body only for German companies and German investors that is chaired by the deputy prime minister himself. And the president of our country has direct control, or is in line of all the projects and plans that are being implemented regarding the German investors and all of the projects. So what happens is every 4 weeks we have an online meeting during the pandemic. It's an online meeting with the deputy prime minister, which we are planning to have one tomorrow actually on the agricultural measures. So all of you are welcome. If you're interested, please let me know. I'll share all the information. So what we do is we hold sectoral meetings with the deputy prime minister every 4 weeks. Before the pandemic, on January and February, we actually had the visit of deputy prime minister to Germany, which we have a theme kind of roundtables on all the projects, on specific areas that would be interested. So we're having quite a bit of a accent on Germany, I would say, compared to all the rest of the world when it comes to investment cooperation as of today. And investors' right protection is actually quite high today, since we are trying to rank up our game when attracting foreigners in this current economic situation around the world. Incentives are quite good. I'm sure I've spoken about this quite a few times already, special economic zones, quite a bit of taxes being zeroed out for up to 25 years, 24 industrial zones with all the infrastructure to be developed. It's no secret to anyone that we have quite a bit of a land that is ready to be acquired, with all the reserves ready to be used for all those projects. A favorable climate. My colleagues already talked about the ranking that Kazakhstan has in the doing business rating and FDI indexes. It is quite stable even with the current situation around the world. Now, trade and economic relations, specifically with Germany. The previous colleague showed that the investment high was in 2016, and it has been declining since then. However, this does not come towards the Germany, as I have said, since we have put so much emphasis on the relations with Germany since 2016, 17, and 18. So my presentation is gone. Oh, it's back. Has been on the same kind of stable curve. So on the right side, you can see the goods that are mainly imported and exported from Kazakhstan to Germany and vice versa. And trade levels are pretty stable for the last few years. We expect this to lower a little bit in 2020 since the restrictions, but overall there have been quite a bit of interest from the German side to trade with Kazakhstan. Now, this is regarding the investment cooperation. So Kazakhstan ranks as the 31st among the countries, and Germany ranks as 11th in terms of investment into the economy of our country, which has a huge potential to grow with the interest and shared industries that can be cooperated with the acceleration of this bilateral investment cooperation. We're hoping that this will have an upgrade in the near future, hopefully in the next few years, after all of the economies come out of this crisis situation. But we expect this numbers to grow by 2021, since we were planning quite a few large investment projects for 2020 that have been delayed now. The start of them have been delayed to either fourth quarter of 2020 or first quarter of 2021. So we're hoping these numbers to rank up in 2021. Now, these are some of the multinational investors and big companies that have already successfully invested in Kazakhstan. There are quite a bit of German companies on all different sectors. And the role of Kazakh Invest in all of this, we act as, on behalf of a government, as a one-stop shop that provides all the information, it gets in touch with the entrepreneurs in Kazakhstan, helps to be in touch with the government of Kazakhstan, to negotiate all the terms and conditions of the project, as well as help to get the instruments that I have already told you about, the incentives, the AIFC involvement, the Kazakhstan Direct Investment Fund involvement, and so on, as well as provide you with all the market research and opportunities across all various non-oil and gas industry projects. So we have over 100 investment projects as of today in the industries that are shown on your website. I'll be happy to share more detailed information about all of those projects if anybody would be interested or would like to refer to some of their friends and acquaintances regarding this information. And if you have any questions, I'll be glad to answer to them. Thank you.
Thank you very much, Ainur. I see participants actually from Germany, from Kazakhstan, Uzbekistan, Russia, even France and Austria for today's webinar. So we're a little bit lack of time, but I have a very brief question to you. Since we have Q&A, could you please tell us a little bit more about the current restriction for enterprises in Kazakhstan? What's the status quo right now at the moment regarding the anti-COVID measures?
So for the companies who are already working in Kazakhstan, the measurements have been lifted down since, I believe, mid of May. This again needs attention on which region of Kazakhstan the company is located at, because since all regions have their own authority to have another lockdown or open up all the trade and movement restrictions. So as of today in Astana and Almaty, there is no movement restrictions regarding that. There was a quarantine from March to May, about 2 months time, where all the trade and international airways have been restricted. As of today, the international borders are closed, so no international airways are allowed in or out of the country. So anybody who needs urgent travel airway, in or out, this opportunity is given by a specific colleague or a commission that is chaired by the Deputy Prime Minister, which they review the cases one by one, where specific people for the project implementation, let's say with the foreign investors in it, needs special technicians or so on to fly into the country to start a certain process. There is this process where also ready to help the companies who need to fly into Kazakhstan for certain measures. There'll be certain procedures, and I'll gladly explain everything in detail. The same with all the foreigners that are in Kazakhstan that need to be flying out. They go through the same process. They go to this commission where regional akimats, governmental bodies, would be willing to initiate this to the state commission that would review the case. So this is regarding the airways. The transit traffic is not restricted as of today for anything that needs to be brought in or brought out. Yeah, did I answer the question?
Yeah. Thank you very much for sharing this information with us. Thank you very much for your presentation, Ainur. And we are moving to our next speaker, Stanislav Chuyev, Head of Research Department, Halyk Finance. Stanislav, microphone is yours. Can you hear us?
Yes, thank you. Yeah. Good morning, Europe, and good afternoon, Kazakhstan and neighboring countries. So let's start the presentation about main macro trends in Kazakhstan. So as the previous speaker mentioned, this year Kazakhstan experiences external pressure from two major factors, from pandemics and collapsing oil prices. So for the first time in history, I think our country experiences such a big quarantine lockdown of the economy since March 2020, which stopped a lot of economic activities. And the most vulnerable sectors were SMEs, non-food retail, transport, and aviation. Also, capital-intensive investment projects were put on hold, and the companies had to keep their cash, preserve their cash in expectation of the end of that crisis. But since the 11th of May, major restrictions were lifted. Still, we have some measures in place, and the economy is gradually recovering. So here comes the second shock from the collapse of the oil prices, which fell by 36% from the beginning of this year, but started to recover by 70% since the 1st of April. So these two shocks resulted in the decline of the country's GDP for the first 5 months of this year by 1.7%. It was announced by the government. So if we look at the bottom left graph, we see that if on a quarterly basis the economics produced quite attractive GDP growth of around 4% and even more on an annual basis. So this year we see quite a big decline, and we will talk a bit later about the forecast for the whole year. And for the 5 months, we see declines of the trade and transportation of the sectors of the economy, whilst all other industries are keeping well still. So if we look at the next slide, we can see that our country has substantial buffers and policies in place to withstand that crisis. So starting from the international reserves, which represent almost half of the country's GDP, if we compare to the last year's GDP, and taking into account oil fund, national fund reserves, we have international reserves almost 90 billion US dollars. Of course, as we've spoken earlier, we feel the inflation increasing month-on-month basis due to mainly food inflation, because due to quarantine measures, the majority of goods traded were food, with non-food retail were being in crisis. And due to floating rate regime, the government has I think, good control measure of falling oil prices to compensate the decline in external accounts of the country. Also, the monetary policy, from the beginning of the crisis, the government tried to prevent outflow of the foreign currency from the country, and they increased the base rate from 9.25% to 12%. But next decision was to decrease the base rate to 9.5% to support the economic growth, to support lending growth, not to restrict this money transition into economy. Also, the measures taken by the government, they consist almost 9% of the GDP, as the previous speaker told, that the government implemented supporting measures which account for almost 11 billion US dollars, 4.8 trillion tenge. And this will help the economy to grow in the conditions of the falling oil prices. As it was mentioned before, the central government's debt is quite low, so we have a room for new loans for the government to finance budget deficit, which is planned at 3.5% of the GDP this year. And if we compare the shape of our economy compared to the previous crisis of 2008 and 2014 with the collapse of the oil prices, so we can see on the bottom of the slide that this time the economy is better prepared for the crisis because we have significant international reserves, which are slightly lower than in 2014, but still quite impressive. They account for 50% of GDP. The exchange rate regime is floating based on inflation targeting by the National Bank. So in the case of significant decreases of the oil prices, the government has quite efficient instruments to control the situation. And moving finally to the prospects of the economy of Kazakhstan, we should note that economy of Kazakhstan is highly dependent on oil and oil prices. So if you look at the upper left graph, we see that in USD terms, the GDP was fluctuating in line with the fluctuation of oil prices historically. It was until the last year, 2019, which is highlighted by yellow, because from last year, the government started significant spendings on social sphere, on various development program. So from last year, the correlation of the GDP growth and oil prices started to decline. But still, the correlation is in place, and high dependence will remain in place. In addition, due to participation of Kazakhstan in OPEC Plus deal, we expect a decline in oil production this year from 91 million tons last year to 85 million tons this year. So based on that factors and taking into account the spendings made by the government, we can expect that in scenario analysis based on oil prices, if the oil price for this year will be 35% on average, the GDP growth can decrease by 1.1%. In the scenario of higher or lower oil prices, we see that the countries' indicators fluctuate correspondingly. So now they see that average oil price is around $42 per barrel of Brent on average starting from the beginning of this year. So we are closer to the scenario number 2, which indicates the growth of GDP by 1.3% this year and the exchange rate of USD to KZT of around 410, which is close to the current level, which is around 401, 403. So to finalize, the economy of Kazakhstan will be highly dependent on the dynamics of oil prices and on the success of the government spending on supporting the economy. I think that's all. Thank you for attention.
Thank you very much, Stanislav. I see questions regarding the sharing presentation. So basically, with the permission of all our speakers, all presentations will be published on our website, and then you will receive the newsletter with all presentation. I have a question to Stanislav regarding the scenario analysis. So as you mentioned that, yeah, thank you. So far we are more in scenario 2, but from our opinion, from rating agency, I would say in our base case, we in scenario 0, closer to the 0 scenario. My question is, what's your assessment of the fiscal support measures by the government? Are they effective for the whole economy and enterprises, or only mitigate the negative social impact from the COVID-related crisis?
That's quite a tough question because, as I've told earlier, it was the first time our economy encountered such a big crisis. So the government is now in the process, I think, of education, how to act in these conditions. Because previously we knew the crises of oil price collapse, so it wasn't a new crisis. But then you need to shut down the economy. It's a completely new environment. So of course, I think these measures will mostly support what we have now, because to develop beyond what we had in the previous years, we need a better external environment. So yes, I think it's more the second answer. It's the measures will be closer to supporting, to keeping, to preserving, to helping to survive, maybe to someone.
Thank you very much. We already have some discussion regarding your scenarios, but anyway, we have the last speaker for today. So Stanislav, thank you very much. And if some colleagues provide us questions, we will deliver it to you. Thank you very much again.
Okay, thank you.
And the last speaker for today, Mr. Aigazin, Director of Applied Economic Research Center. Zhanybek, the microphone is yours.
Thank you, colleagues, ladies and gentlemen. Good day, good afternoon. So I just want to make some my statement related to your previous question of now. If just see our historical data, so I'm 45 years, so I'm experienced this is transition period of economical history of Kazakhstan. So if it just look on this is historical data of GDP increasing, decreasing, so in 1902, 1905, 1906, we experienced that kind of downturn and declining GDP growth. I know in the high, this is high decreasing of GDP in 1995, it was, it's approximately 5% of GDP. So it's not so like, and yes, for our new nowadays, it's, of course, this is for us, it's new crisis. Actually, this is our structural break now. I consider that this is a structural break for our not for our economy, for global economy, actually, because we are not experiencing before in our economical history. But I believe in economical cycle. So we have cycling, we have downturn, we have recession, we have growth, etc., etc. This is just cyclical. But most important things, how we prevent, first of all, how we prevent and how we fight, how we struggling against this is of consequence of that crisis. So, and this is my opinion about it. So, thank you. Just my today's presentation is related for our forecast. What before speaker said, I don't want to touch current situation of Kazakhstan economy. I just start from our forecast. So I'm just the main purpose of our forecast is actually published on our website, and we provide updated forecast for macroeconomic growth, considering the impact of coronavirus with both internal and external prerequisites. So you know now with this COVID, actually as term. Kazakhstan is a small open economy. Actually, we are price taker. So where the no different consequence recorded economic growth for 2020, and we based on forecast of Minister of National Economy, IMF, rating agencies, and from another bodies. So prior to going into detail, let me just shortly outline our findings. According to our equation, according our forecast, real GDP will fall dramatically by about 5%. Nominal GDP okay, annual average CPI inflation accelerate to 8.1%. Current account balance, it was in deficit. It's about 8% of GDP, and deficit of state budget we will expect 2.5 trillion tenge. Next one. As I recall you, our forecast based on this is main estimation of main forecaster body. I mean, Mineconomy, Minister of National Economy, IMF, rating agencies, World Bank. You know, as you see on this slide, I think more optimistic forecast for this year is presented by Minister of National Economy. 1 month ago, Minister of National Economy presented them own forecast that GDP growth on that year will be decline at least for 1%. And mostly more pessimistic scenario. I mean, not and keeping in mind our figure as Standard and Poor is expected 3%. For us, for our forecasting models, we just putting this kind of assumption for our forecast. According to our forecast, we putting like at exogenous variables for global economy will decline, will down for 3%. Stabilization for oil price, what said before our previous speaker, but according to our figures, oil price in average for this year will stabilize on this bond. On average level, $37 per barrel. And third assumption is a reduction of domestic oil and gas production till 76.2 million tons. I saw from previous presentation, Halyk Finance, they put it declining till 85 million tons. So we have more pessimistic, I mean, this is scenario, but I want to recall you, this is figure 76 million ton. It's according to decision of OPEC plus. Let's start from our forecast. On this slide, you see our prices. I mean, this is prices for exchange rate and industrial PPP, CPI, and deflator of GDP. According to our baseline scenario, I now present you a baseline scenario. Of course, we made a lot of scenario, a lot of forecast, and just choose more invariant scenario for this presentation. According to our baseline scenario, exchange rate will depreciate for this year till 424 tenge per $1. It will be more decreasing compared with previous year. GDP deflator projected by IRC will be 4.2. And as I said before, CPI, I mean inflation, will accelerate to level 8.1. But I want to recall you that this forecast we made in April, and we accumulate all formal, informal information on this period. I mean, for situation for April in global and our economy. So, as this is our quarterly forecast. So next forecast will be published in July. So I hope our figure and our forecast, of course, will revise. Next one. Aggregate demand, economic growth. So based on our baseline scenario, household consumption expenditure in this year will show a fall for 1.2%. Gross fixed capital formation, I mean, this is our investment, will be in negative zone on level minus 1.4. At its first time starting since 2009. Volume of real export of goods and services will demonstrate this is decreasing on this year for at least 40%. And export not will decline drastically compared with export. Of course, because we are not producing all goods in Kazakhstan, so we expected that volume of export will decline on 19%. And as a result, our aggregate demand on this year will decreasing. So, according to our assessment, real GDP on this year we expected will fall by 5% on this year. It's the first time, I mean, first this is time from 1995. Nominal GDP, of course, it's nobody interested because it's not for economists. Forecast for current account. Trade balance, according to our forecast, may become negative and first time this year and level at $500 million because reduction of value of export of goods. So balance of services will narrow to $1.4 billion and reduction of amount of income payable of foreign investor from last year from 23 to 12 billion. It's what is related to current account position. Decreasing in income available from external investment of Kazakhstan from 2.4 billion to 1.3 billion. It's a consequence of falling interest rates and value of securities in globally. So its conclusion, assuming a notable fall in the trend balance, the current account balance will be recorded on this year till 8.6 in deficit of GDP. What is related to external position of Kazakhstan? So on this slide, you can see our forecast to state budget. I mean, this is a consolidated budget. It's some Republican plus local governance budget. So we expected that government deficit, I mean, this is deficit of state budget, will decrease till 3% of GDP. So this is just additional slides for our forecast. It's not related to forecast. This is just show this is business cycle of economy. Now you can see this is output gap. So and according to for three measures of GDP gap, it's our now our business cycle it's going down. It's just needs for policymakers. So and compare with our fiscal, it's just how to return to question for fiscal stimulus. You can see this is fiscal policy now. It's starts to be more counter-cyclical according to macroeconomic theory. It's just for I think for your brain. So that's it. I want to be more shortly, and so this is final slide. Thank you.
Thank you very much, Zhanybek. Thank you for your presentation and for sharing with us your forecast, which is, as I understand from our list of speakers, one of the most negative. And with the Q&A part, I would like to ask each of the speaker for today the following rather philosophical question. So obviously we expect the recovery from this crisis next year, or in some positive scenario or super positive scenario by end of this year. I would like to ask each of you, what's your expectation about the dependency of Kazakh economy and Kazakh fiscal position from oil and gas sector after recovery from this crisis? Is it going to increase or going down? Because what we notify in the previous research from our rating agency is a positive factor. The dependency on oil and gas sector was decreasing before the COVID situation. So, Zhanybek, what's your view?
So thank you, Vladimir. Yes, in this like ideal storm, this is how to say black swan, according to Mr. Taleb. So it's not expected, and now our time in all our forecast, I think Stanislav will agree with me, all our forecast under big uncertainty. This is big uncertainty for us because we don't know what will be maybe next year, next week, next month, next quarter. All forecasts under big uncertainty. So, of course, from a macroeconomic theory, in this kind of crisis, I don't say about monetary policy, because monetary policy by term, monetary policy is pro-cyclical. But now in this time, fiscal policy, fiscal stimulus must be counter-cyclical. I mean, now if all people sitting at home, just staying at home, what can we do? Like you, like me, like another people, without any activity, we're just sitting at home. What we can do? I think main things it's state. State must be more just how to say main driver of economy now. This is helicopter money. What we can do? Only helicopter money. Yes, of course, it's depend from position of about reserve of countries. It's depend from reserve of countries. Netto exporter of oil like Kazakhstan and Russia. Of course, we have this is reserves. But what about in other countries who doesn't have any reserves? What they can do? And of course, this is negative impact. This is on wellness and the income of population. This is main, I think, dramatically consequence of this crisis. And of course, in this, I think this is timeline in this situation, maybe only government, only fiscal, this is stimulus, fiscal money must to maybe to support people and support economy. And of course, this is according to Keynesian theory.
Thank you very much, Zhanybek. And the same question, I think, yes, Stanislav, could you share with us your opinion? What's about the dependency of Kazakh economy and the fiscal budget after the recovery from this crisis? So, Stanislav, can you join us?
Yes, thank you.
Yeah.
Just a small remark to Zhanybek. Every time we make a forecast, we face a lot of uncertainties. Every time we go out of our house, we can be driven over by car.
So we cannot hear you.
Sorry. Hello? Can you hear us?
No.
Hello? 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 Can you hear me? Okay, just to answer the question, yes, every time we make a forecast, we face a lot of uncertainties. So we just need to consider all the spectrum of possible scenarios. And as I mentioned in my presentation, yes, starting from last year, the correlation between the oil price dynamics and the growth of GDP started to decrease because of higher government spendings. So the only way maybe we can decrease our dependence on oil is higher spending of the government, as Zhanybek mentioned earlier. So yes, maybe due to that crisis we can expect lower dependence, but only because of the actions of the government, not because of development of other sectors of economy. It's a development of governmental sector. Hope this is the answer.
Thank you very much, Stanislav. And answering the same question regarding the dependency of economy, I would like to invite Ainur. So can you share your opinion with us regarding the dependency of the Kazakh economy from oil and gas sector?
Well, my opinion, I think, is very clear on this regard. We as the government of Kazakhstan has been striving to diversify the economy for, I don't know, past few years already, very actively. And my job and job of foreign affairs and Kazakh investors specifically, that is try to diversify the economy and help to develop all the other industrial sectors of Kazakhstan and try to get more attendance of foreign major players, let's say, that can transform and develop those industries. And on government behalf, and what government is doing as of today is trying to create the best climate it can, so the foreigners would be interested in that. And hopefully in the future, with the development of new projects and development of new sectors, we can be less dependent on oil and gas.
Thank you very much, Ainur, and thank you all speakers for today's presentation. And we would like to also to invite you to our following events, which is Bank Credit Rating Instrument for Successful Fundraising During the Crisis, which will be 2nd of July 2020 and will be performed in Russian language. So all Russian speakers, please, you are invited to join this webinar. The video recording of this webinar will be available on our website, as well as all presentation of all speakers for today. And also, please go to our website to see the calendar for 2020, and we will definitely inform all participants from European Union as well as from CIS countries regarding our next revisions of our sovereign ratings and other topics.